Happy New Year and welcome back to F.A.C.E, Thomas. How are you?
Oh, I'm doing fine, thank you. We have gotten a really big pile of snow in Helsinki during the last 2 days. So.
Yeah.
Makes sense.
What?
If you don't have snow in Finland, where will you have snow?
No, but we don't always have snow in Helsinki. Actually, last year we really didn't have. So.
Yeah, you see, it's weather is really changing. I was on the beach most of the days during the Christmas holidays, which Greece is a much hotter country, but still having Christmas days on the sea is not something that's quite usual.
You're on the beach. I thought you said something else.
No.
All right. Anyway.
Okay.
Anyway, Thomas, so if you want to share your screen.
Yeah, I have a few slides, but if you want to talk about Italy, that's okay too.
Yeah. So one of my colleagues was talking about that Renzi is stirring up some things in Italy, and I brought you up, and that you're looking for the epicenter of a euro crisis to begin in Italy because of their banking situation. And my other colleague who just asked you about the snow said, what makes Italian banks any worse than any of the other European banks? Can you answer that for him?
What makes them worse? They are in the worst condition. They were in the worst. They have been in a rather bad condition since the 2008 crisis. They really didn't handle the 2008 crisis very well. And then if you look at the growth or the performance of the Italian economy since 2000 even, it has been rather dismal, and they have had several regional banking crises over the years, at which they have always resulted as means of bailout. And now with the massive hit of the coronavirus last year, the lockdowns, and they basically lost the whole tourist season last summer. So there will be a massive kind of losses incurred from that to the banks. And we know already that they had a quite high share of non-performing loans.
The same is the deal in Greece, but the problem, Tuomas, is that governments are just keeping all these zombie corporations and banks alive by throwing good money after bad, and especially now with the COVID excuse, they've in essence unleashed all the barriers to do so, because now they even have an official excuse why things are failing and why they should be supported.
That's true, but the one thing is that people don't really understand, don't often understand, that the governments and the central bank, there's a section of the banking sector which the governments and the central banks have no access to, and it's the interbank markets, where basically banks lend to each other, and it's based all on the trust. And if that's broken for some reason, then the banking crisis emerges immediately. That's what happened in 2008. So, and let's just think the political situation in Italy for a moment. If you consider that it would result to a situation where Italy could leave the euro, and let's say you are a bank in Switzerland and you are lending to a bank in Italy overnight, but if there's a risk that Italy leaves the euro, why would you lend to an Italian bank even overnight, if it would mean that the next day you will get your money back with the 40% discount or something like that? So that's all that is needed, the breaking of trust.
Wouldn't the ECB step in? We had the same situation here a year ago in the fall with our repo market, and that's when the Fed came in, started to expand their balance sheet because the overnight repo market spreads were going up. So the Fed was able to ameliorate that. Would the ECB be able to be as effective as the Fed was to calm it down?
No, the thing is that the repo market it's kind of a public market what comes to compared to the interbank markets. So interbank markets operate just between the banks, and they they settle their overnight loans basically, or the requirements of the what's the word? Well, anyway, they need to have this certain amount of money at the end of its business day, and they use that, but they also acquire long loans, terms with longer loans with longer terms. So, and that's the thing, that it's not, there is no way central bank can access that market. It can only try to support the banks, but it cannot force banks to lend. While with the repo crisis, it actually could force the primary dealer banks to lend, but in this case, it cannot. So it's and especially in Europe, we don't have such a large primary dealer bank system. So it's just something that the ECB cannot do.
Okay. All right. So the backstop that we have here in the U.S. Our Fed,
unless, because I remind you that I'm Greek, and we went through the Greek crisis, during which a lot of unprecedented things happened until the crisis was actually resolved. So, there is always the counter argument that, in times of crisis, you can see actually all those institutions, like the Fed did in March, build tons of new facilities, out of nowhere within a day. So,
Yeah, that's true. But let me be clear. The interbank market operates on trust between banks. And if that's broken, there's no way any outside institution can fix it. So it's a trust market, just purely. So that's the thing. And there is no way you can build the trust there if it's lost between the banks. So that is the black horse, or the black sheep. Swan, yes, swan or sheep, yes. So that's how it goes.
Or the horse of the horses of the apocalypse, huh?
Yeah, the horse of the financial apocalypse.
All right,
many names can be invented.
Yeah. So anyway, we're looking at Italy on the chart that you have here. Is it at the bottom? The weakest recovery in the first week of January. Okay.
And had a massive fall in the Christmas holidays. Italy is the yellow one here, so it took a massive dive, and now it's recovered already there. But it, just if you compare, if you look at the beginning of last year, everyone was around the 100 level of the index.
Right.
And now we are between 40 and there's one country, Spain, which is in the close to 80, but this is a massive, steep drops in the economic activity. The Bloomberg doesn't actually tell what's in it precisely. There is some credit card data, people moving around data and stuff like that. But still, these are, we know tomorrow we actually get the new ones, but there's a massive drop in the during the Christmas holidays, and economies are not meant to sustain such deep drops in economic activity. They just aren't. The incomes of corporations just goes haywire, and then you cannot pay back the debt. And and the thing is, what comes to Italy actually, that they have had the debt moratorium in place beginning of June, and they start to end around now. And they should be scaled back within a 6-month period.
But they're just going to end it all.
Well, we'll see. We don't know.
Once or gradually.
Gradually between now and June.
And this was for what? Real estate or all forms of debt? Banks.
All bank lending.
I see.
So there was none. And the European central banks has actually been really worried, also in private discussions with politicians, that what is happening under the moratoria or the blanket of moratoria. So what is building there? And they will say, actually, just was it a week ago? There was a questionnaire made on the Finnish corporations and how they see their near-term future. And was it that there's a risk of, was it 12,000 Finnish companies failing when the moratoria lifted? That's a massive number. We usually have 1,000 to 2,000 bankruptcies per year.
Mm-hmm.
So, and this is a kind of a time bomb that is waiting in every corner of Europe, at least. So when the moratoria are gone, the bankruptcies may start coming in fast. And that would mean massive increase in unemployment and, and more problems for banks. So what the governments and the central banks have essentially built is the kind of a machine of complete financial destruction. That the debt moratoria were a really bad idea, because now we don't know where the economy actually stands. So it's something that should scare us all, because it can start really fast when it gets going.
The tipping point. Could the tipping point be political?
It could be political, it could be economic, just that the companies start failing, or it could be financial markets could crater in, and there's or then just the trust in the banking sector breaks. It can start in a multitude of directions. We actually, in our December forecasting report, I can show you the forecast at the end, but we kind of found that it's impossible to forecast the growth rate of the economy for the next few years, because there's so much uncertainty.
Right.
So of course you can throw some numbers, but you could just roll a dice. It's the same thing. We just don't know. There is so massive uncertainty around. It's insane, actually.
Okay, so what kind of signs are you looking for, and how are you going to position yourself for this, Tuomas? I know you were talking in the spring. A lot of people are bringing up the spring for a lot of different cycles.
Yeah.
In the across the board in different markets.
Yep.
The dollar, equities. By then, what's could be ironic is that maybe when people think everything's going to be okay or better because of vaccines and the economy is being able to open up, that there'll be a sense of optimism, and then this thing happens. The solvency issue begins to happen. Instead of it happening at the bottom of COVID in March, that maybe we've overcome it. Do you see that as a possible scenario? COVID being handled, and that's when people will least expect any kind of economic problems.
That's the risk, because the thing is that even if someone would snap their fingers and the coronavirus would disappear tomorrow, the economic hit has already, it has already come. So we cannot escape it. It can of course get worse from here. But if you look at this, just look at this, like numbers. If you consider it in April and May, the economic activity decreased at close to 20%. That's just consider it for a while. So basically, 4/5 of the economy just disappeared for a while. So the economies cannot function in these states. You get massive defaults, failures, stuff like that. And now they all have been masked by the moratoria, by the massive borrowing by the central governments, and the monetary stimulus by central banks. If you just look at this, the balance sheets of major central banks. Look, the Fed is the green one. It's a ridiculous increase. ECB balance sheet is pushing up all the time. These are actually there's billions of dollars. And the interesting thing is that the balance sheet of the Bank of China is not moving much. But these are, if you just look at the Fed, it issued within 4 months, the balance sheet exploded from around 4.4 billion to over 7 trillion. So it's a massive increase, insane, really. And that was the point when the Fed essentially take over the US financial system. And how long can they keep doing it? If the next time the market breaks, so what happens? So people are putting a lot of faith on the central banks, but actually you cannot guarantee that they can keep this up. You cannot just push the markets up by liquidity alone. It just doesn't happen. You can push a kind of liquidity driven mania, which has happened like many times, like in 1928 and 1929, and we know how that ended.
Well, don't you think we're getting that with some of the IPO action here in the U.S.?
Of course, we are in a massive bubble. And if you just consider what asset class does not look like it's in a bubble. If you know, credit markets are a bubble, stock markets are a bubble, real estate is in a bubble. So it's a everything bubble, as was titled about years ago, a few years
Right.
ago by someone. But now we're really there. It doesn't make any sense. The economy has kind of collapsed already, but it has been masked, and then the central banks and governments have pushed massive amounts of debt in the economy just to make it appear that we are recovering, and that's a mirage, a dangerous mirage. So we are not worried actually that there will be an economic crisis. We are worried that there will be a complete implosion of the global economy. That's our worry now. And it's just, and people seem to be walking around like there's nothing major happening. We will recover from this, but no, they haven't really looked under the surface or under the hood of the global economy, and it's not good. Let me show another example. If you think about the manufacturing recovery in the world, well, it's driven by this. This is the cumulative aggregate financing into the real economy of China, and the green one is last year. And if you notice, China has been recovering only by the massive increase in the debt issued, pushed into the economy, credit and stuff like that. So this is a measure that tries to take account every kind of every line of debt that is issued in the economy. And now currently, the debt levels in China's economy are growing 3 times faster than the GDP. You don't have to be a financial wizard to understand that that is not sustainable. And if you think about that, the Chinese economy is heavily indebted already, and they're just pushing more debt on top of the already massive debt pile. So it's it's everything can be okay, and then there's that one tipping point moment. Could the tipping point moment, what gives us a shove, that people are finally waking up to that rates may actually be heading up? The 10-year in the U.S. broke out over 1 bips and hasn't closed back under it. It's pulling back a little now, but if we're on our way to 2.5, 3, how can economies, even the U.S., what that's going to cost the U.S. in interest payments, a tripling from 0.4, 0.5 to even 1.5, could be burdensome, couldn't it? Could, yeah. It could be a massive burden. And the thing is with these like asset market manias is that they just, it can be anything that finally breaks them, and then when they start to like fall the prices, then they just keep on falling because all the people or the investors who have leveraged up, they have to sell, and they quickly becomes a fire sale.
Can you define for our audience the difference between a liquidity crisis and what's the other word? It's
solvency.
Not liquid, huh?
Solvency.
Exactly, Thomas. Yeah. What's the difference?
Well, that's this is always a tricky thing, but liquidity is something. If you consider, for example, a bank, liquidity crisis is when you don't have enough cash to give it to depositors who are taking it away, while solvency crisis is when your business model has failed, so you are in a bankrupt state.
Okay.
So that's the basic difference, and it applies. It's of course a different thing with investors, but basically the same thing. So liquidity is just when you can liquidity crisis emerges when you suddenly cannot, let's say, roll over your debt.
Right.
And the solvency crisis appears when you cannot pay that debt from your income stream.
Okay. All right. So
just adding that.
Really, so really that's your point. Is that your point about the Fed, that they can be successful at solving liquidity issues, but not solvency?
Yeah, that's my point exactly. And it's never a good idea to try to fix an over indebted issue with more debt. That's like the basic logic of life. Everyone understands that. But that is exactly what has been done. If it just, this is a government debt to GDP ratios in the euro area and in the United States. Really, as a share of GDP, very high before the crisis. Well, the decline in the euro area is basically just Germany and Spain. But for example, the US and then a big spike upwards to really high levels. And now, if you just think that, how will governments go with these debt levels? They cannot if the central bank is not pushing the interest rates down. So this creates a really, and the thing is now that many don't understand. If you look at the history of financial crisis, never ever have we been in a situation where there is an over indebted issue in governments and corporations at the same time globally. So they may have been existed in one country at a time, but it's a global problem. It's really a massive thing. You know, if I've been doing academic research on economic crisis for 10 years, and this is the situation has never been worse than it's now. And the thing is that when corporations have a lot of debt, like they have in the US, also in the Eurozone, but more in the US, when the recession comes, the recovery starts from the fact that the corporations have room to leverage themselves up to take more debt. Now they don't have it. The other option is that the government has a low debt level and it can support the economy when the recession or the crisis is deepest. Now we don't have that either, and also we tend to have a interest rate rather high when we go into crisis, which then can be lowered by the central bank. That's gone too. And in top of that, we have a weak banking sector in Europe and asset markets in this everything bubble. So if you look at the whole picture, you should be able to understand that the complete implosion of the global economies is actually frighteningly possible. It can happen this time around, and it's a really worrisome thought. But that's the only conclusion you can come up if you put all these topics in their own baskets and then compare and combine on the same basket and then look what you see. You cannot have any other conclusion than that.
Well, that's the risk. Are you a reader of Jeremy Grantham?
Actually, no.
Okay, because he's called bubbles before and crashes before. I'm not sure if that's his first name, but I know it's Grantham, and he's been on CNBC, and it was a few months ago.
Yeah, observer. Yeah. Actually, I am. Yeah.
Okay, good, because he was saying, and this is before there was an even more pronounced move, and this was after the recovery in COVID. He was saying that it's that the U.S. And stock traders have the chutzpah, which is kind of a Yiddish word for nerve, have the nerve to, put a stock market bubble on top of this economic backdrop. So, the market kept going. He's saying you can't call a top with this information, but there's definitely the conditions are ripe for this being one of the biggest bubbles ever in economic history.
Yeah, we actually fully concur with that. So this is really dangerous situation. That's like, and I don't know where you can put the money at the moment.
What do you think is going to happen to the dollar during this? Will the dollar benefit from this European crisis?
Yeah, but that we don't. If you look at the political situation in the U.S., it's. Well, you know what it is. So
yeah, I know what it is.
And before we thought that when the European banking crisis begins, the dollar will be the safe haven for a while at least. Now we cannot guarantee that either, because we don't know how the situation is going to play in the US on the ground. So that's a really tricky question. It's hard to see what could happen could it act as a safe haven? Sure. Could it not? Possibly. So we are in a really strange a situation actually, where there's really few places you can actually trust that will hold their value. Gold being the
blue chip.
Yeah, and then if you look at the Bitcoin, it's tulip mania, ring any bells? So it's a I don't know. It's these are strange things.
Okay.
Strange times.
Yeah, strange times. Excellent presentation about what's going on. What do you have here? Guesstimates.
Yeah, this is actually, I just saw this till the end. This is our forecasts in January. So we assume that the European banking crisis will start not next year, this year actually, Q2, and based just on the moratoria drawn. But the thing is that like we mentioned in the end of the assumption, the massive economic, political, financial uncertainties regress forecast as guess estimates, and this is just something we throw around. But this can go either way. But the point here is that it's basically impossible to forecast what will happen next year or this year. I mean,
okay. And what do you think the chances are? I mean, we always extend things when things look bleak, of the debt moratoria being extended. The recovery fund of the EU is ratified. 50-50 that happens, or
both happens. I don't know. I don't know, 50-50. I think that's probably the best guess now. Because the Finland, we should our moratoria are ending this by the end of this month. And for some reason, there hasn't been any talk of continuing them. So we'll see. And the recovery fund it's not so clear cut now with the Italian situation also, though. We don't know when do we get it ready? Do we get it ratified? What will Italy do? The Europe is also becoming a political mess. It's been brewing under the surface for a while, but it's really like it's a big pile of done, basically, where we are.
So I want to wrap it with this. Do you believe there is a war on cash, and that the crypto experiment is happening so that the global population gets used to not using cash, plus they could use the COVID reason as it being a spreader of the virus? I know I'm getting a new credit card that's going to be contactless, where you just show it. And is there a big war against cash in Europe and your country as well, where they're discouraging people from using cash? And do you think we're going to move completely away from cash into just a digital type?
That's how it looks. That's how it looks. If maybe next time when I'm on, we can talk about the central bank digital currencies and the risks they pose to economic freedom and everything. It's really
that's the end of economic freedom. The end of cash.
That's the end of cash. And if central banks get their way and get the digital currencies issued, then we are really deep in the hole. They can, it's a dystopian kind of scenario.
I was just thinking about that word. I used to watch them in the movies, and now I feel like I'm living in the movie. So
that's the craziest thing.
Don't you?
Yeah, it's
so
the same
surreal.
Thing. Yeah. If we would have been talking a year from beginning of past year about this, I would say that now probably wouldn't happen. No, that wouldn't happen. Now you're kind of seeing that everything starts to happen right before your eyes, and you're wondering what is going on. Who is pulling the strings? And we have to ask these questions, because it seems that all the plans have been there already, which kind of scares me a bit. So where they are trying to take us, the global elite or whatever you want to call them. But the problem is that we really cannot say anymore that there could not be some kind of I don't know, conspiracy is a difficult word, but something because it starts to feel like planned, and that worries me quite a bit.
Okay. I was going to ask you one more thing, but I forgot. So, it's always, good to talk to you, Tuomas. I mean, we get a lot of Pollyanna stuff going on all the time, and I know everyone kind of feels it in their bones, what's going on here, and appreciate you bringing some numbers to back up your narrative. and you're kind of a watchman for us in Europe. Appreciate you being here, and I'm going to bring you back as if we still have the internet in April, for us to talk about.
Well, then we can exchange letters if they, let us.
I'm gonna go purchase a couple of carrier pigeons.
Yeah.
And, we could communicate that way, but I appreciate you coming here and being a watchman and giving this side of the coin for our community to consider and think about.
Yeah.
Thank you so much, Thomas.
And be safe, and let's talk again.
We will do that.
Okay.
All right. My good news, trading warrior brother, Tuomas Malinen. Thank him, everyone, and appreciate you being here.
Thank you, Tuomas.
Thanks. It was a pleasure again.
Okay.
Yeah.
All right.
By the way, on an unrelated note, Tuomas, since you're finished, I've been actually impressed by how many social policies you have in Finland.
Oh?
You Finnish people are a very logical type of people, and since I have friends there, when I realized that you actually have a lot of socialism and weird policies having to do with unemployment, etc., I was quite impressed. So a comment from you?
Yeah, we have a kind of if you look at from the US perspective, we have a kind of socialistic system, but it's all based, or it has been based on entrepreneurship and big corporations and the very fundamentals of free market capitalism. That's how we got in it. But now we have this left screen government which is messing things up. So it's a bit of a worrisome picture whether we can hold on to this programs and the welfare state we have. But I think actually, because I have also lived in the US, so the Finnish model could be rather functional in many places in Europe. Not so much in the US, but we could many countries could take examples from us. That's for sure.
Okay.
Yes.
Thank you.
All right. Well, thank you, Tuomas. Thank you, Steve. Thank you, F.A.C.E. Everyone. Hope you enjoyed it. And we'll have Tuomas back here in the spring to see where we're at in the solvency crisis. And thank you, everyone. Have a great trading day. Adios, and we'll wrap up the week tomorrow. Don't just count your conspiracy stories. Count your blessings. And I'll see everyone later. See you tomorrow. Adios.
Bye-bye.
Bye.